Hey everyone, this is Diane Vay from Diane Vay Finance. So right now it seems like commercial real estate tenants, investors, and lenders are hesitant and seem risk averse considering how fragile the market appears. And when market sentiment shifts, it's not just investors paying attention, lenders are too. And for borrowers, it helps to know what investors are looking for and where people are spending money before capital gets deployed. And before I proceed with the rest of this video, this is for educational purposes only and is not personalized, financial, tax, or legal advice. So consult your own professionals before acting. Now, according to Urbanland, nearly all of the inflation-adjusted spending growth is concentrated in the top 20% income earners with gains from AI-related stock. And while this has been the topic of many conversations, headlines within the past couple of months have expressed concerns over a tech bubble. Consumer-driven sectors like retail, hospitality, industrial, and apartments are active, with dining, wellness, and entertainment leading leasing activity. As for credit availability, according to Yahoo Finance and Lightbox, there has been an increase in lender-driven appraisals, 5% month-over-month, 7% year-over-year, reflecting demand and improvements in refinancing pipelines supported by lower treasury yields and growing lender willingness to underwrite as interest rates ease. Credit availability has improved across credit providers like banks, insurers, debt funds, and CMBS providers. According to BizNow, this past year demonstrated an increasingly competitive lending environment, with private debt funds dominating lending this year and bank issuance having increased 85% year over year, hitting $227 billion in the first 3 quarters. As credit opens up, it's worth remembering how lenders see this situation. Increased borrowing is one thing, but repayment behavior is another, which helps explain why caution shows up in lending decisions. As for alternative lending, according to NAIOP, alternative lending, often structured as debt funds, has gained traction in recent years. At first glance, it may seem like a good opportunity for everyone involved, but it tells me that people are looking for security considering the uncertainty in the economy. Right now, it seems like people are looking for an alternative to traditional institutional lenders because of multiple factors. There's opportunity for alternative lenders as lenders are looking to minimize the risks involved, for example, larger investments, and because traditional institutional lending may not be a good fit for the borrower, whatever that case may be, and anyone looking into alternative lending should consider the risks and the amount of equity maintained when borrowing from a lender. In addition to consumer-driven sectors, I'm seeing increased investor interest in multifamily commercial real estate based on the research this week. For borrowers, watching what investors are backing and what alternative lenders are comfortable funding can help you understand where capital is currently flowing. And as for what investors are looking for in this market, I was listening to CNBC's interview with a Billionaire CRE developer. They posted this interview earlier this week, and to paraphrase, he said, something I think allows us to understand what investors are looking for. Logical deals with plenty of downside protection, with no interest in risk profiles and a preference for long-term strategy for long-term success. I think this video is worth watching. He goes into certain skills, which I think are more so characteristics for him, that enabled him to succeed in the industry, including understanding where the market is growing, understanding what's going on in that area, the demographics, where the supply chain of capital comes from, having awareness to make informed decisions where there's price distortion, and the value of utilizing one's product or services to enable growth. And even as I'm sharing what I've come across while researching for this video, I encourage you to reflect on the word. As I mentioned before, there is uncertainty in the market, and it's unwise to mix fear with money, especially when we're supposed to meditate on the good things. 1 John 4:18 says, "There is no fear in love, but perfect love casteth out fear, because fear hath torment. He that feareth is not made perfect in love." 2 Timothy 1:7 says, "For God hath not given us the spirit of fear, but of power and of love and of a sound mind." And we need a sound mind to make sound decisions. Philippians 4:8 says, "Finally, brethren, whatsoever things are true, whatsoever things are honest, whatsoever things are just, whatsoever things are pure, whatsoever things are lovely, whatsoever things are of a good report, if there be any virtue, and if there be any praise, think on these things." So what are you meditating on? And one last thought. What are you paying more attention to? Interest rates or lending standards? Comment below. And thank you for watching.